Hello and welcome to the channel. Mike, the mortgage guy here to help you navigate the home buying process. Today, for the first video, we're going to start with some basics. We're going to discuss the difference between an FHA and a conventional loan. Let's break it down. FHA and conventional loans are two of the most common types of mortgages. Well, FHA loans are commonly associated with first-time home buyers. Both mortgage types are available to new and repeat borrowers. FHA loans may be best for borrowers with lower credit scores and perhaps a negative event in their credit history, and less money saved for a down payment. But they come with mandatory mortgage insurance premiums and can only be used for primary residences. Conventional loans, on the other hand, have stricter eligibility requirements, but may have lower overall costs and higher loan maximums, along with fewer property restrictions. We'll break down how FHA and conventional loans stack up and help you determine which is best for you. So, what is an FHA loan? So FHA loans are backed by the Federal Housing Administration, the FHA. These loans have low minimum down payments, as discussed, and flexible credit requirements, making them popular with first-time home buyers and easier to get than other mortgage types. FHA loan rates are often lower than non-government mortgages. However, required fees can end up making your total costs higher. When applying for an FHA loan, you work with an FHA-approved lender, like myself, rather than borrowing directly from the government. The FHA, a division of the U.S. Department of Housing and Urban Development, insures the mortgage, which means it reimburses the lender a portion of the loan if you default. Because of this guarantee and the FHA's flexible guidelines, banks and mortgage companies are willing to lend to borrowers with lower credit scores. So, what's a conventional loan? Conventional loans are mortgages that aren't insured by the federal government. They are the most common types of mortgages, making up 74% of new loans on single-family homes in 2023. Because conventional loans aren't guaranteed by a government agency, they have higher minimum credit scores and stricter borrowing requirements than government-backed mortgages. Conventional loans have fewer fees and lower total costs as well. Most conventional mortgages are conforming loans, which means they follow standards and borrowing limits set by Fannie Mae and Freddie Mac, two government-sponsored enterprises that purchase mortgages from lenders. Let's start with some of the basics. Credit score requirements. The credit score you'll need to qualify for an FHA loan depends on the size of your down payment. If your credit scores fall between 500 and 579, you can get an FHA loan with 10% down. But to take advantage of the minimum 3.5% down payment, you'll need a credit score of 580 or above. Conventional loans have higher minimum credit score requirements. Lenders typically require scores of at least 620. In both cases, you may qualify for a loan even without a credit score if you have high compensating factors, like a high income and low debt. Speaking of debt, let's discuss the next thing on the list, debt-to-income ratios. Lenders use your debt-to-income ratio, or DTI, the sum of your monthly debt payments divided by your monthly pre-tax income, to help determine your loan amount and your interest rate. FHA loans have a maximum DTI ratio of 43%, but allow up to 50% with the compensating factors that I mentioned, large down payment or high cash reserves. Conventional loans prefer a DTI ratio of 36 or less, but may allow up to 45 if your financial situation can support a higher debt load. Some lenders may accept an even higher DTI ratio for non-conforming loans, mortgages that aren't eligible for purchase by Fannie Mae and Freddie Mac. Next up, minimum down payment requirements for each loan. FHA loans have a 3.5% minimum down payment if your credit score is that 580 or above, like I mentioned. If your credit score is between 500 and 579, you must put at least 10% down. Conventional loans typically require a 5% minimum down payment, but some lenders allow for 3% if you meet income guidelines or are a first-time home buyer. However, to avoid paying private mortgage insurance on your conventional loan, you must put at least 20% down. If you're getting an adjustable rate mortgage, you must put at least 5% or more down. Next, let's get into the mortgage insurance that I mentioned. Mortgage insurance protects lenders if you fail to pay your loan as agreed. All FHA loans require mortgage insurance for the life of the loan. You'll also pay an upfront mortgage insurance premium on FHA loans, which is 1.75% of the loan amount. This gets financed into the total loan amount. Keep in mind that financing this change results in higher monthly dues and a higher overall cost of borrowing. Additionally, on an FHA loan, you'll pay annual MIPs, mortgage insurance premiums, of up to 1.15% to 0.75% of the loan principal spread across monthly payments. Typically, you'll pay MIPs for the entire loan term, but if you put at least 10% down, you'll stop paying them after 11 years. Conventional loans only require PMI, private mortgage insurance, if your down payment is below 20%. Your PMI amount depends on your loan term and your down payment. Some conventional loan programs have reduced mortgage insurance premiums for moderate income borrowers with less than 10% home equity. Unlike FHA loans, you won't pay PMI for the entire loan term. It automatically drops off when your loan to value ratio is at 75%, or you reach the midpoint of your loan term. Next up on the list for each program is the loan limits. FHA and conventional both have specific maximum loan amounts. Let's get into that. As mentioned, both conventional and FHA mortgages have loan limits based on property type and location. The FHA loan limit for a single family home is $498,257 in most areas of the US, but may be higher in some counties. If you're interested in what it is in your county, type in what your county is and FHA loan limits. Similarly, you could do that with conventional loans as well to figure out what the max and minimum loan amounts is for your county. Most conventional loans follow conforming loan limits established by the Federal Housing Finance Agency. The 2024 conforming loan limit for a single family home is $766,550. That means your loan amount for a conventional loan cannot exceed that amount. These higher loan limits for a conventional loan can allow you more freedom when shopping. You can buy a home above this loan limit by taking out a jumbo mortgage, which we'll get into in another video. Finally, let's discuss interest rates for each loan program. Mortgage rates do depend on multiple factors, including your state, credit score, property type, and other transaction details. However, the mortgage insurance on each loan will drive up the total loan costs. Since FHA loans have two mortgage insurance premium, your annual and your upfront, one of which typically remains for the entire term of the loan, FHA loans often have higher annual percentage rates, APRs, than conventional mortgages, wiping out the potential savings of a lower interest rate that you could initially get with an FHA loan. Another important thing to keep in mind is occupancy factors for each type of loan. Generally, FHA loans can only be used to purchase primary residences. You must occupy the home that you're purchasing with an FHA loan. Conventional loans, on the other hand, offer more flexibility. They're commonly used to finance primary residences, but you could also use a conventional mortgage for a second home or an investment property. Keep in mind, interest rates on non-primary residences may be a little bit higher to offset the increased risk to the lender. Next up is property appraisals. When you purchase a home, you'll always need an appraisal. They differ slightly between FHA and conventional appraisals. Here's how. All mortgage lenders require a home appraisal to confirm the property's value before you purchase. FHA appraisals assess a home's value and evaluate whether the home meets HUD's minimum property standards, which is a set of guidelines that ensure the house is safe, sound, and sanitary. This makes the FHA appraisal process more involved and sometimes longer than the conventional loan process for appraisals. If the property fails to meet the standards, it could delay the closing, impact the purchase price, or cause the lender to deny the loan. FHA appraisals cost slightly more, averaging about $750. Conventional loan appraisals, on the other hand, focus on the home's condition and the value based on comparable homes in the area, but they don't look for specific requirements. You'll typically pay between $400 to $500 for an appraisal on a conventional loan. This comes down to the final question. Should you get an FHA or conventional loan? This is going to differ for every single different borrower based on your income and exactly what you're looking for in a home. But the basics for an FHA and conventional loan ultimately depend on your financial situation, credit history, and your home ownership goals. While each type of loan can meet various needs, you might lean toward one or the other in some scenarios. If you're unsure, contact me and we can discuss further. An FHA loan does make sense if you have a lower credit score, if you have a higher debt to income, or if you have limited savings. Maybe you have an adverse financial situation in your credit history, like a bankruptcy or a foreclosure. On the other hand, a conventional loan makes sense if you have a strong credit score, maybe above 620 or higher, you have a sizable down payment. As a higher down payment mean you'll pay less PMI. You can avoid PMA altogether when you put 20% down or more. If you're buying a second home or an investment property, conventional loan is going to be great for you. Or if you qualify for the 3% down payment options, if you're a low or moderate income home borrower, or if you're a first-time home buyer. Additionally, if you're buying a higher priced home, conventional loan limits are much higher than FHA mortgages, allowing you to buy a more expensive home. All in all, speaking with me and going over in detail your financial situation is going to determine which loan option is going to be best for you. Hope this video helps.